Let's talk about closing costs in a residential real estate transaction. Closing costs and prepaid expenses are the fees associated with finalizing a real estate deal. They typically range from 2% to 5% of the property's purchase price, and most are paid at closing, which is when ownership is transferred from the seller to the buyer. Let's explore what they are and how they impact your home buying. For this presentation, we will focus on the buyer's side of the transaction. Types of closing costs. Not all closing costs are the same. There are several types of closing costs you should be aware of. Number 1, lender fees. These fees include charges from your mortgage lender, such as loan origination fees, credit report fees, underwriting fees, and appraisal fees. This can also include discount points, which are optional fees paid up front to lower the interest rate on the mortgage. Number 2, title and escrow fees. These fees cover the services of a title company, ensuring that the property's title is clear and providing title insurance to protect against ownership disputes. Escrow fees involve holding funds and documents in a secure account until the closing is complete. Sometimes notary fees are also charged if there are expenses related to notarizing documents. Number 3, attorney fees. In some cases, you might need to hire an attorney to review legal documents or provide advice during the closing process. Document preparation fees are also charges for preparing necessary legal documents. Home inspection, survey, and appraisal fees. These fees cover professional inspections to assess the property's condition, to verify the property's boundaries and measurements, and to determine its value. They are often paid up front, however, or outside of closing, but are nevertheless closing costs. Number 5, property taxes and insurance. Prepaying property taxes and purchasing homeowners insurance are often required by lenders. Number 6, recording and transfer fees. These fees involve recording the new deed and mortgage with the appropriate government office and transferring ownership of the property. Prepaid expenses. Prepaid expenses are costs that are paid in advance and typically cover ongoing expenses related to the property. Types of prepaid expenses. Let's explore some common prepaid expenses. Number 1, property taxes. Prepaying a portion of the property taxes ensures they are up to date when you take ownership. Number 2, homeowners insurance. Prepaying the first year's insurance premium or a portion of it is often required by lenders. Number 3, mortgage interest. Prepaying interest from the closing date until the end of the month may be necessary. Number 4, homeowners association dues. Prepaying a portion of HOA dues ensures the account is current at the time of ownership transfer. Importance and tips. Understanding closing costs and prepaid expenses is crucial because they significantly impact the amount of money you need at the closing table. It's also important to note that closing costs can vary depending on the location, price of the property, and the specific terms of the transaction. Here are a few tips to help you manage these costs. Number 1, review the loan estimate and closing disclosure provided by your lender to understand the exact costs. Number 2, shop around for service providers to compare fees and find the best value. And number 3, consider negotiating with the seller to cover part or all of your closing costs. And there you have it. Closing costs and prepaid expenses are important factors in a residential real estate transaction, and it's best to know what you're dealing with up front so there are no surprises. Remember, closing costs encompass fees associated with the transfer of ownership, while prepaid expenses cover ongoing expenses paid in advance. Together, they all represent closing costs. Good luck on your home search, and thank you for watching.